Philip, let's start with the markets, because given what we're seeing in these frenzied retail stocks, and I know you're not going to talk about GameStop probably, but does it have an impact on certain parts of finance that could make history? Is it something that could turn ugly very soon?
Good morning, Francis. Great to be on. Thank you very much. Whenever you have events like yesterday, you have to kind of step back and ask yourself, is there a fundamental reassessment of the market outlook? And I would say at this point, probably not. The biggest risk right now remains the pandemic. The vaccine administration is going to be the key question. Of course, we have corners, pockets of frothiness in the market. You can see that very clearly. When you look at some of these intraday moves, we've had some of the most extraordinary short covering that we've seen ever yesterday. But then again, to me, that's not surprising when you think about how much liquidity is in the system, how much policy has fueled asset prices in recent weeks and months. So to me, this looks like pockets of frothiness, some irrationality, undoubtedly, some nonsense, undoubtedly. But at this stage, I don't really see a cause for a fundamental reassessment of the market outlook, which continues to be driven primarily, I would say, by how much cumulative activity loss we'll have at the end of the day. And that, of course, is a direct function of how the vaccine administration is going to turn out over the next couple of weeks and months.
Philip, could this actually infect investor anxiety at large? Could it go on to that? Could it become that?
I think what would really do that would be if we saw a significant derailment of the vaccination strategy. The good news, and we should remember this, Chairman Powell said yesterday rightly that if you look at unemployment, it looks worse than the financial crisis. However, if you look at cumulative activity loss, it is still very likely that we're going to end up with only a fraction of the cumulative output loss that we suffered during the financial crisis. And I think that's the key driver. The fund right now just put out some estimates thinking that it's going to be about a fifth of the loss that we suffered in the years after the financial crisis. And to me, that is the fundamental driver. And as long as we can be sure that the vaccination works, it gets us to a better place by mid-year, I think that forecast will be correct, that we will, in the end, have far less cumulative output loss than we did in the aftermath of the great financial crisis.
Dr. Hildebrand, good morning from New York. I want to talk, and I want to center this around the mathematics, which I'm sure you learned at the University of Toronto years and years ago. And that is, at the end of the day, on any form of derivative transactions, cash has to cover the trade. There's no question about that. We've seen that with two noted hedge funds making a cash infusion into a troubled hedge fund now. How should an institution like BlackRock adapt and adjust in the coming months to the reality that there's going to be billions of dollars of losses and somebody's going to have to cover those losses?
Well, remember, Tom, our business model is very much long-term. 2/3 of our assets, of the clients' assets that we manage on their behalf, are related to pensions, to retirement. So by definition, as a platform, cumulatively, we are very long-term oriented. And that's why we need to look at these factors that are really going to affect the overall outlook of markets and not just the day-to-day situation. I think it's clear that some of what we saw yesterday is some people had to sell positions to fund other positions in the derivative market. So I think those are some of the natural things you get when you do have pockets of frothiness, as we do currently.
Explain to us now your view of Europe. I notice inflation expectations is wide apart across the Atlantic between the inflation lift of America versus the challenges of Europe. You are intimately familiar with this as a former head of the Swiss National Bank. Philipp Hildebrand, on the state of European inflation and the state of the economy, please.
Well, again, you look back at inflation as a global phenomenon. First of all, that's the way I would always start. And here I definitely see some signs that, assuming that we can get through this pandemic and the vaccination strategies work, and Europe is sadly lagging behind a bit on this. But I think if you look through that, you will see that we're probably underestimating the inflation dynamics globally. We're going to see long-term effects, the shift to sustainability, which we think is tectonic. It's really a very significant shift. That's going to tend to be inflationary at some level. I think the rearrangement, the rebuilding of global supply chains, making them more resilient, is likely to be inflationary. So I actually see longer term, as I look through the kind of short-term activity and volatility, I do see an uptick in inflation. Markets are right now pessimistic on Europe. If you look at 2020, we've seen significant outflows out of European equity markets. My guess is that's about to change. Europe has done some very important things in the last year. Most importantly, the Recovery Fund is about to spend significant fiscal resources in all countries, including on the shift to sustainability and net zero. So I would not be surprised at all if the market is going to reassess the European outlook in the weeks and months to come.
Philip, how quickly could that repricing actually happen? So if you are expecting inflation, which the market at the moment is not really looking at, which, that of course changes the trajectory for central banks, would that be a shock?
No, I don't think it's going to. First of all, it's not going to happen immediately. It's going to be, moderate. I don't think we're going to see any kind of runaway inflation. And moreover, in the first phase, I would expect central banks to ensure that rates remain low. So in a way, we're going to see gradual pickup in inflation, probably to a different regime than what we've had in the previous decade. But certainly initially nothing alarming, which would allow the central banks to keep rates low. So we're going to have an environment initially where growth will surprise on the upside, inflation will start to pick up, but we'll continue to have low rates, which of course will be good for the for servicing the very high debt levels that we have coming out of this crisis.
Dr. Hildebrand, long ago and far away, you were at More Capital Management. You know the hedge fund game. I want you right now to defend the boys on the couch. I take great issue with the idea that these are children playing with laptops on the couch. I would suggest there's a relative level of sophistication there. Hedge funds are allowed to lose money. Hedge funds are allowed to do stupid things. Why are we tarnishing these people on the couch, just taking the other side of the trade?
I'm not tarnishing anyone. I think we just have to. I think we just have to recognize that technology is changing everything, as we've really all of us have experienced these last few months, and it's changing the way people invest and trade. And the regulatory system, the oversight system is lagging behind. That's going to create volatility, which is exactly what we saw yesterday. I think the key, Tom, at a time like this, you have to step back as a long-term investor and think about, has anything changed fundamentally, and what's the biggest risk? And I would say right now the biggest risk remains the pandemic and the vaccination efforts.
Talking about big shifts, will London remain the financial global capital that it's been post-Brexit?
It will remain a very important financial capital. I'm convinced London has extraordinary resilience. The country has resilience. It'll bounce back, but we should not expect things not to change. Again, I mentioned some of the very significant steps in Europe. I think this crisis has reinforced the willingness, the will, frankly, to consolidate Europe. And I would certainly expect to see that some of the European-oriented activities in finance will inevitably shift to the continent. That's an inevitable consequence of Brexit. But we will continue to see the UK be a very important financial center. I have no doubt about that at all.